Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market. A bit of a roller coaster today due to FOMC and the JPOW, of course, conference, if you will. So yeah, with all that being said and done, let's just jump right into it. If you enjoyed the video, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor, and of course, my membership section on YouTube is live. The link is down below for $3 a month. Access to all my thoughts, posts, updates, options flow, etc. The link is below in the description of the video. But jumping right into it, Tesla closing the day down about 2.2% on the day, putting us at about just over $187 per share, which compared to the market is arguably an outperformance because QQQ was down 2%, so Tesla only being down 2.2% essentially. Arguable outperformance, not a huge outperformance, more or less in line, but arguably a very small outperformance relative to how it usually moves relative to the QQQ. So anyway, with that being said and done, let's jump into it. So pretty interesting stuff. So first, let's talk about what happened last night. As I'm sure some of you are aware, let's talk about kind of just overall the picture, right? Two things. First of all, last night, as I'm sure some of you are aware, and if you're not, you should be, the whole, Elon Musk with his pay package, the compensation package that was instated in I think 2018 or something like that, give or take, was pretty much denied by the Delaware court judge, and that got completely and utterly void, right? And technically, just raw information that should be bullish for shareholders because it reduces dilution essentially. Since that they don't have to be paying Elon it was like $50 billion, right? That's quite a lot. Now, the bad thing was, or the potential bad thing was the fact that, well, how is Elon going to respond to this? Elon is kind of like that wild card, the wild catalyst, right? Like he can throw some pretty serious hissy fits, we'll say. And so far, he's been pretty surprisingly tame and normal about it, honestly, on Twitter, X, whatever. So that was good to see. And because of that, Tesla did drop about almost I think 5% post-market, after-market last night, and then recovered all of it. And we actually went green like 1.5% at some point today before JPOW brought the market back down to reality. So that's kind of the overall picture that we have that occurred there, right? JPOW pretty much, I think the main thing that really tanked the market, again, not just Tesla, the market, which is pretty much for this right here, was him pretty much saying that the March cuts are probably not going to happen. Not 0% chance, but not something you should be holding your breath on. And most likely it'll start in May, potentially June or something like that, right? So we'll see. The next thing to note is the fact that tomorrow we do have more, massive earnings coming up, Amazon, and probably the most important one being Apple. So as long as those two don't just completely, shut the bed essentially, and as long as they go ideally even well, that'll be good. Why? Because, well, Tesla's earnings is done. That uncertainty is out of the way. Elon, there's still some uncertainty with him in that Delaware package, but people are saying it's overall can be potentially a net bullish thing where they can essentially reinstate a new compensation package for Elon that can be rearranged in a proper way with the proper wording, and also can now also include this 25% voting power that he wants, or at least close to 25% voting power. And it can actually overall be a net positive. We'll see. Maybe that's, some copium, if you will, but we'll see how that plays out. But that's potentially some uncertainty gone as well, a little bit there, but not too much, still some there. But we're also going to have a lot of the major earnings uncertainty for just the broader market out of the way as well. So all of these uncertain factors that are now slowly getting dished away can be good for the market and Tesla as well. And we could potentially finally see a bit of a rally. So let's talk about what this rally can entail and what we can expect essentially moving forward. So we are closing pretty much right at this 5-day moving average today, right? We were well above it, but now we're closing pretty much right at it. So we'll see how we open up tomorrow as the market digests the news of FOMC and the JPOW speech. Usually the market takes a day or two to really truly digest it. Right now, usually what you see is emotion and or really just algorithms trading it. So we'll see how the market truly responds to it tomorrow, which we are slightly up in post-market right now. We'll see if that holds or not, of course. But, tomorrow with Apple and Amazon earnings, that can definitely change, hopefully for the better. Now, that's the main thing I'm looking at, right? So we want to be seeing, a push above this. But the fact that Tesla had such a potential, almost like a black swan event last night, was down about 4% pre-market, and we still ended up recovering the vast majority of it. And we only fell really just because the market in general fell as well. While Tesla arguably slightly outperforming the market is a good sign that, this 180s-ish level seems to be a pretty strong base. Remember how before I was telling you there's a lot of cash secured puts and being seen by whales being sold, pretty much suggesting that they believe this general 180s level should be the base for Tesla? Clearly, that seems to be the case if even that Delaware case wasn't able to push us back down even lower, and we ended up recovering the vast majority of it, if not all of it. So that's a good sign. Now, with that being said, there's two pretty much important things, and it's a pretty simple situation, at least in my opinion, that we find ourselves in. we want to be breaking above this yellow trend line, right? Whether you look at it on the daily over here, whether you look at it, let's say on the 4-hour over here, we want to be breaking above this, right? That'll essentially be breaking above about 195 per share. That's the level that Tesla is looking to break. And once we break above that level, I think, the next level will be obviously 200 just for psychological purposes. But I really do believe that once you break this downtrend and break 195, 196-ish, give or take, I really think that, the move back up to roughly the gap fill of the earnings gap should be pretty quick. I really do believe that. I think it'll be a pretty quick move, and I do think that that is going to happen. But with that being said, an important caveat here is the fact that while we do remain below that 195-ish level, essentially below this trend line and pretty much still within that downtrend, well, as I'm sure you can guess, we're still technically in this downtrend that has started ever since we were back all the way up here around 260, which seems crazy that we were at 260 like a month ago. Pretty unreal. But nonetheless, obviously, as long as we're in this downtrend, well, we're still in the downtrend. What does that open up the possibility of? At the very least, coming back down to double bottom at 180, if not maybe even a little bit lower to about 177-ish, which is still technically the real bottom-ish of this overall massive channel that we are in, that we never really truly actually touched. So that is always a possibility. So just keep that in mind. That would still be another about 5-ish% to 6% a drop, which is pretty substantial still. It feels like it's quite a bit, and it is, but that is still technically a possibility. So take that for what it's worth as well, because that is in the picture, in the equation while we're in this downtrend. But I do believe we will break this downtrend, at some point, whether it's this week, whether it's next week. I do believe it will be broken. It's just whether or not do we get this one more move to the downside or not. That's pretty much the only question. Obviously, if the market completely, shits itself and really just collapses, well, that's going to be bad for Tesla as well, most likely, unless Tesla decides to really outperform the market, which is always a possibility. But that's kind of the main picture, right? As long as we're within this downtrend, 180 to 177-ish is still in the cards. But as long as, when we do break this downtrend, things should start looking a little bit brighter for Tesla finally, which will be nice to see. So that's pretty much the most important thing I'm looking at. Now back to the 4-hour chart, you can see the MACD finally starting to flip bullish. It's pretty much been bearish pretty much ever since this downtrend began. It really flipped bearish, and it's been bearish ever since. Had this little bit of a false break up over here on the MACD that looked like it wanted to start flipping bullish, but it clearly was not the case. Main reason for that is, of course, his earnings, which, like I said many times, can throw technical analysis pretty much out of the window for that specific move. So that's important to understand as well. And that's exactly what it did. But we're back once again after this bottoming. Just now, once again, flipping bullish on the 4-hour, which is a pretty respectable time frame. That pretty much can suggest, that we can finally be flipping into bullish sentiment here, at least now or maybe relatively soon, for the next week, maybe 2 if we're lucky, right? So that's pretty cool to see. So we'll see how that plays out as well. But that's the main thing I'm looking at, right? Just not to make this too complicated. There's no reason to make this too complicated. Those are by far the most important things. We have the 21 EMA still sitting at about $211. So I do expect us to pretty much come up to there sometime. Maybe if we're lucky this week, but probably next week, which will pretty much roughly line up with that earnings gap as the 21 EMA slowly makes its way back down to us. Now, again, one thing I'll quickly mention once again that I did talk about yesterday is, of course, this death cross, right? The death cross is when the 50-day moving average crosses below something like, in this case, the 200-day moving average, and that's pretty much on the verge of happening, right? It's probably going to happen. I'd be surprised if it doesn't happen. Maybe, I don't know, Friday? Maybe by Friday? Maybe tomorrow? But probably by Friday or Monday. It's going to happen. It's at this point, it's inevitable, unless we just have the most insane rally known to mankind, which I guess is possible, but probably not likely. Keep in mind, the previous time the death cross did happen, like I mentioned in the other video, was all the way back here. It pretty much crossed right here on May 26th while we were actually getting this rally. So pretty much a similar situation we find ourselves in right now. We had this massive downtrend. Same over here, massive downtrend. This was all, happening pretty quickly as well, right? Yeah, so massive downtrend. Similar idea right here, pretty steep decline actually. It was a pretty fast one as well, right? This was about a 45% decline. We had the flip over here, but what happened as it flipped? Well, we not only continued this rally, bit of a downtrend here, but ultimately we just went sideways, nothing too crazy. And then we actually had a beautiful rally up to almost just above $300 per share. So that's what I'm saying with the death cross. It doesn't mean that it has to happen right here. It doesn't mean that Tesla has to start selling off dramatically right here, right now. It can take quite a while for it to really, truly play out. Might not even play out at all. It's not really, an end all to be all situation. I know some people look at it as such. I personally don't. It's not ideal, obviously, but it's not the only thing that matters either. You know what I mean? So just, important to understand that as well. But ultimately, that's pretty much the main thing I'm personally looking at right now. I'm really just looking at, do we end up finally, or when do we really finally break above this downtrend? Keep in mind, with this downtrend being as steep as it is, this yellow line right here, even just going sideways will technically break us out, because in order for a downtrend to continue, what do you need to sustain it? Well, you need a downtrend for a downtrend to continue. As long as we stop the downtrend and even go sideways, ultimately it will lead us to pretty much break out. It doesn't have to be a rocket up and out of it. Ideally, if that's the case, then it's better if we do that. But even just going sideways, technically, will stop this downtrend because we're no longer downtrending. So important to understand that concept as well, right? It's not necessarily a rocket and massive rise is needed to really play that out. Now, obviously the main question still lies, we talked about it briefly, but where do we go once this downtrend is broken? Because it will be broken. You can't have a downtrend forever. The stock market doesn't move in one direction, right? It's pretty much always zigzagging. Well, the downtrend will be pretty simple. Once it's broken, the price targets are pretty simple. First and foremost will be the earnings gap, right? Like I said, that's the first main level I'll be looking at, about $210 per share, give or take, of course, right? And that's roughly where the 21 email will be, of course, on the daily as well. If we do break above that, my next targets will be pretty much sitting at the retest of these trend lines and also the 200 moving average, right? Don't forget the 200 moving average on the daily charts is sitting at about 230. So that would be like the highest one. I'd be surprised if we go much higher than that, I'll be completely honest. But in between that, we would also have somewhere around 220 as well, which would be a retest of these trend lines as well, and the 200 moving average on the weekly. So in other words, upside targets once this downtrend is broken at some point, right, whenever that may be. Of course, earnings gap fill essentially would be the first one, which would be at about $210 per share, we'll say. Above that, it unlocks the potential to retest the downtrends at about $220 per share, give or take, of course, which is where also the 200 moving average on the weekly is. And above that, we have the retest of this downtrend that we broke down below all the way up here, which is also sitting at about $230 per share, give or take, of course, which is where the 200-day moving average is, of course, on the daily chart. So those are the main levels I've been looking at for upside potential. And that's pretty much the way I'll be playing it. You can see we're pretty much sitting at a high volume area over here. And once we do break above pretty much 195, the volume substantially decreases to potentially even as high as $230. But the volume does decrease. So, that can play into our favor as well. So we'll see how that plays out, ladies and gentlemen. But with all that being said and done, if you enjoyed the video, of course, as per usual, don't forget to hit that like button. And yeah, I'll see you tomorrow. We'll see how the market reacts tomorrow to the FOMC news. And of course, we have Apple and Amazon earnings tomorrow, which hopefully, fingers crossed, are pretty good. I forgot the last thing I'll mention is this, right? We forgot to talk about options flow, cheddar flow. Link is below if you're interested, 25% off. But pretty much throughout the morning, very bullish flow. You can see here a lot of green throughout the morning, and it obviously made sense. We had a pretty nice recovery throughout the whole morning. FOMC started, and you can see the red start to flow in, right? A lot of red pretty much came in. This was pretty much all during FOMC-ish situation. Pretty much constant flow of bearish, and well, that's exactly what happened. We ended up moving to the downside, right? And then towards the end of the day, the bullishness rather started to come back pretty much as FOMC ended, and we got some pretty nice calls coming in as well. So we'll see. So far, the options market has been pretty correct. They've been correctly predicting these trends. Obviously, the people that had a lot of short-term bullish, like weekly options call flow from yesterday, put a lot of money towards it too, probably got maybe destroyed unless they were somehow patient enough to wait until it went up about 1% and somehow maybe still made some money on it. I don't know if that's the case or not. I'm not sure how their options moved specifically, but for the most part, today at least, has been pretty accurate, right? Massive bullish flow in the morning, massive rally, massive recovery. FOMC started, massive bearish flow. We did fall pretty substantially. I did enter a little bit of puts myself, nothing crazy, just for the sake of having some profit on this downturn. And then again, towards the end, some nice bullish call flow coming in once again, hopefully until tomorrow, and the market reacts, positively towards it. But yeah, with all that being said, thanks so much for watching. And as usual, I'll see you tomorrow for another big day, but hopefully tomorrow, if it goes well. A lot of uncertainty, a lot of these questionable things, if you will, like earnings and whatever, FOMC, all that is done. And now we have a bit of clear water, a little bit of room to breathe for the market to hopefully get a little bit of a retrace back to the upside. So we'll see if that happens to be the case or not. But thanks for watching, and I'll see you tomorrow. Peace.